Thanks very much. I've got to admit there's a little bit of pressure being introduced as exciting because I'm still in mining, but there you go. Thanks everyone, it's great to be here. Let me tell you about Alkane. Bit of a company snapshot for us. We're headquartered in Perth, but the majority of our investment, our existing operating mine and our major exploration project are both in central western New South Wales. The mine there you can see, Tomingley Gold Operation, which I'll talk more about, is halfway between Dubbo and Parkes. That mine we built in 2013, it's been operating since 2014. And over in the Boda Kaiser project, a little like Patrick just talked about, is a large copper gold porphyry project. It's about 110k north of Katy, or about 17k out of Wellington. We finished a scoping study on that. That has been drilled out to an inferred and indicated, 2/3 of this resource indicated, of 15 million ounce equivalents. There's 8 million ounces of gold and 1.5 million tonnes of copper in that. I'll tell you about both those things. A little about our company for those that aren't familiar. Obviously ASX listed. We're covered by those brokers that you can see down the bottom. Our chairman, Mr. Ian Gandel, holds 18%. He's a large part of the directors and management that you see there. And the institutional holdings that we have, most of those are index funds because we're on the gold indices. So your overseas and Australian index funds. We don't have a lot of basically funds invested in us. The majority of people like all of us here in this room. 600 million shares on issue with a market cap of $250 million. We have a debt facility, which we took out a bit over a year ago to fund some of the projects we're going to talk about. That is a $60 million debt facility with Macquarie. At that time, we took out hedges, which are at 28.40 Australian. And as you can see, of course, we're in the money on all of that because we produce at a lower cost than that. But those shares themselves are out, that hedging is out of the money. That's about 35 to 38% of our forward production until the middle of 2027. I'll talk about Tomingley, our gold mine. So you can see from the picture on the top right, that's 4 existing open cut pits that we mined out, and we've gone underground underneath those. And we've been underground since the period of time that you can see in 2019. We went underground, and then that really came online in FY21. So that's a chart of our production. You can see that the first part when we did open cut, we mined about sort of 70,000 ounces a year at a cost of around $1,100 an ounce. Went underground, that's averaged sort of 65,000 ounces a year at a cost of, that ended up averaging about $1,450 an ounce. And the next phase of mining we're entering now will end up averaging about $2,000 an ounce. This coming year, we'll be doing between 70 and 80,000 ounces at somewhere in the $2,400 to $2,600 an ounce. The reason why that's an aberration higher is because we've arrived in a new mining area, which we call Roswell, to the south of our existing mine, and we're developing up and down at the same time to open up a whole new mining areas and let us increase production. And we're spending a fair bit of capital to get there into this new mining area. So, sorry, just to outline, you can see there where it says existing Newell Highway. Sorry, one thing I forgot to mention was, to develop those open cuts, we're moving the Newell Highway 1 kilometre to the west. We already have an underground development that reaches from the bottom of those grey open pits all the way down to the top of the yellow. So we are underground mining already at Roswell. If you look at the capital projects that we're doing, because we're in a capital spend phase at the moment, we are at the moment in the late stages of construction of a paste plant to maximise ore recovery underground and a flotation regrind circuit to improve recoveries. So we're in the late stages of doing that. We've upgraded the site's power and we've built a whole new residue storage facility. Next year, what we want to be doing is moving the Newell Highway, increasing processing plant throughput, and then starting our open cuts. We don't need to do that. That's what we want to do to move from 80 to 100,000 ounces. Here's the next 2 years. The reason that's a transformational period is it finally realises for us the maximum potential of this resource that we've been in for so long as we move to 100,000 ounces. So you can see that quarter on quarter we slowly lift production. Underground, that's driven by grade, and that's just the natural mining sequence that we're in, and that's one of the reasons why we've got vertical development really hammering it this year. That stabilises, and then we bring on the open cuts after that. You can see that we're putting out a lot of growth capital in order to achieve that objective. But we expect to be at an 80,000 ounce run rate now already. I've mentioned, in presentations before, we've just crossed over the end of August. So we've done about 12,300 odd ounces so far this quarter. We're on track for 18,000 ounces, as I said there, 16,500 to 19,000 ounces. But you can see that we're moving towards that 70 to 80,000 ounce run rate. We're already there. That's what we're doing at the moment. So that's going very well. And you can see that our costs there are, circa that $2,400 an ounce. That, of course, ramps up and the cost falls away because we'll have commissioned the paste plant, we'll commission the flotation circuit that we're talking about. All the time, we continue to mine and we continue to operate and we continue to pour gold. You look at that over the 5 years, you can see the open cut kicking in FY 27 to 29, and that's how come we go to 100,000 ounces. Of course, we do have production beyond the current plan. This mine, which is approved, everything I've talked about, moving the Newell Highway, that's all approved. I have all those approvals done. There's no more interaction required with the government to do those approvals. We have approval out to 2032. We can do a modification to extend that further. We've got reserves that exist beyond the current 5-year plan. It's just I can give you the 5-year plan in a lot more detail. So many options open up after that 5-year period that it starts to get a bit greyer. We have resources available to us at depth under Roswell, under San Antonio, the Coloma pits. We continue to drill all the time. We spend a couple of $1 million every year drilling within the ore body itself. And regional exploration up and down the corridor continues. A little about Boda Kaiser, and of course, if you have more questions on Tomingley, come and grab me at the booth, which is almost straight out the back of the conference room. A little bit about Boda Kaiser. So it is a large, very large porphyry project. We've done a scoping study on it. So a scoping study is typically done at plus or minus 35%. The best way to develop a large porphyry is with a very high throughput mine because the grades are low, right? So our grade, the resource grade is 0.55 to 0.58 equivalent, so when you put it all into gold ounces. So if we did 20 million tonnes, these are the kind of metrics you would get. You'd pay it off in about 4 years. You'd make about 160,000 ounces of gold in the first 5 years and about 35,000 tonnes of copper. Be a big operation, be very serious, but you'd spend $1.8 billion to get it going. Clearly, that's not the kind of thing we're intending to do ourselves. I've spent a lot of time and continue to do so engaging with larger gold and copper companies to look at partnering processes going forward. We have spent about $70 million to get to this point because we've drilled this out to indicated resource. You can see the drilling on the right-hand side. These are conceptual pit shells. You'd of course do some sort of sub-level caving operation after this. That drilling goes down over 1 kilometre deep. And for people that can't read the legend, the purple is over 1 gram equivalent in there. And so you can see a large porphyry deposit, multiple porphyry centres, like Patrick talked about in Ecuador, similar type of project. And so we continue to do studies on that. But what are we doing now? Well, we've drilled this out to an indicator resource. We don't need to know much more about this project. We're doing exploration up to the northwest. For people interested in exploration, come and see me. I'll talk you through our explorations program. But we continue to explore roughly $5 million a year. We've been spending about 20, but we're back at $5 million a year now. And we're engaging with potential partners who are particularly interested to know more about this project and what our intentions are with it. So that's us, pretty simple. So let me recap. The first thing, and I'll sort of dispel a couple of Alkane myths. One question I get asked is, hey, these are pretty big projects. How are you going to get this approved? You say that you're taking this for environmental approval. How are you going to do that? Well, in the last 12 years, the company, of which I've been with for 11 of those years, We've had 3 major projects approved in New South Wales. We've had the original Tomingley mine approved. We've had the Dubbo project, a large $1.5 billion at the time in 2015 rare earth project near Dubbo. We've had that approved. That's an approved project. We've had the Tomingley extension, which is a whole other project approval approved. So we're very familiar with the approvals project. We're very familiar with the environmental requirements. We're very familiar with getting it done. So we fully intend to do that. We're doing the environmental studies now. We're putting in water bores. We've got a weather station. We're starting the flora and fauna surveys. So we're progressing the approval process for Boda Kaiser. At Tomingley, we're increasing that production first to 80,000, then to 100,000 ounces. Let's say the market completely fell apart and gold was $2,800 next year, Aussie. Well, we have our hedging for a third of the production at $2,840, but we have puts for the other 65% of production at $3,000 an ounce out to 2027. That would be at the minimum price that would be paid for our gold. And you can see that our cost base, including all the development, is below that, right? So I think at $250 million, our stock presents a remarkable buying opportunity compared to other people's. I've plotted a pathway to cash flow. I've told you what it is. I myself, look up the Appendix 3Y, bought shares a little while ago, because our share price, we had some index funds sell out and our share price went down. No fundamental reason, but it did. So check it out. Come and tell me I'm wrong. Come and tell me I'm right. Come and tell me you hated my presentation. Come and tell me you loved it. It's all okay because we're going to the break now. So thank you all very much. I look forward to talking to many of you more. Thank you.